Hi, welcome back to another edition of Lippers Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the week ended Wednesday, February 19th, 2020. For the second consecutive week, the pension fund business saw inflows of about $10.4 billion. And for the for this President's Day holiday shortened fund flows week, investors generally pushed the U.S. markets higher, but they were keeping a keen eye on the deadly coronavirus. This is something that people have been going off and on. A lot of people thought it was going to be kind of low-key, similar to the SARS virus that went on. And now we're learning that China actually changed its reporting status, and the numbers actually leapt this week, and people have been very concerned. However, what's been keeping people in the game is that they've been focusing on Q4 corporate earnings, and that has been pretty good this year, or this quarter so far. And also, we've had kind of a slew of healthy economic data that kept people certainly interested in playing in the game as far as the week goes. So, during the week, during the fund flows week, the Nasdaq and the S&P 500. First of all three indices, were down in the kind of the bottom of the barrel on the first day of trading on Thursday. But after that, they actually, Nasdaq and S&P, both hit new record highs for the week, and certainly kept, again, people excited about where the market was going. We saw the Nasdaq actually having the highest return for the one-week period ended Wednesday at 0.94%, but on the flip side, we saw the Dow Jones Industrial Average actually shed about 0.84%, and this was really on the back of some poor news from Apple. Apple actually gave some guidance saying their Q2 earnings season was going to be really possibly quite low. They said they were having a lot of problems in with their manufacturers in China, and so they said, listen, we don't have a lot of the components that we need, and so we're having some pretty big issues with earnings going on. So really, they said it was related to the coronavirus itself. So why don't we go ahead now and turn our attentions to the mutual fund groups as a whole and find out what the flows were. Let's take a look at our macro groups. If we take a look at our macro groups, equity funds lost about $2.9 billion. Again, remember I said it was a pretty good market for equity funds. Nothing to write home about, but again, another week of outflows, $2.9 billion. We saw taxable bond funds taking about $5.3 billion. We saw muni bond funds taking $1.6 billion, and money market funds took in about $6.2 billion. So that basically brings us now to taking a closer look at the equity funds, so we can get a play-by-play detail on that as well. If we take a look at the equity funds were up for the third consecutive week, 0.18%. Like I said, it was nothing to write home about, but it certainly was a positive return. But for the eighth consecutive week, we saw outflows, this time to the tune of $2.9 billion. And how that broke out, we saw domestic equity funds lose about $3 billion. Eighth consecutive week that they've seen outflows, but they actually had the stronger return, 0.46% return, and also plus side performance for the third consecutive week. Now on the non-domestic equity side, we saw inflows of $1.63 million, $163 million, fourth week in five that they've seen net inflows, but they lost about 0.44%. It's the first week in three that they've actually had negative returns. How it broke out is we saw large cap funds lose another $2.3 billion. Small cap funds lost about $374 million, but international equity funds took in $386 million, and global equity funds saw about $172 in outflows. So not really a big story there, but again, it's kind of a head scratcher when you take a look at the flows going into negative returning funds and positive returning funds are seeing all the outflows. Kind of weird. Well, let's go ahead now and take turn our attention to the equity ETF side of the business. For the third consecutive week, they've seen net new money, this time only to the tune of about $777 million. Basically, what we saw was Invesco QQQ Trust taking the biggest chunk of money, $735 million. We saw the Spider portfolio S&P 500 taking about $690 million. But at the bottom of the barrel, we saw the Spider S&P 500 ETF SPY lose about $3.2 billion, and the JP Morgan Beta Builders Japan ETF lose about $733 million. Let's go ahead and turn our attentions back now to the taxable bond fund side of the industry and take a first look at bond funds. So if we take a look at this group, we see that for the 7th consecutive week, they've seen net new money come into the group. $5.4 billion net new money came into that group. 3rd consecutive week that they've actually had plus side performance this week to the tune of 0.13%. Now, corporate investment grade debt funds actually took in the lion's share of the money, $4.1 billion. Flexible funds took in about $504 million. And on the bottom side, we saw balanced funds lose about $84 million. And now that brings us to the taxable fixed income ETF side of the business. And when we take a look at the taxable ETF side of the business, we're basically looking at $2.6 billion in net new money coming to that group. 3rd consecutive week they've taken in new money. And it's the 2nd consecutive week they say plus side performance. The average return was about 0.20%. And taking a look at how this broke out, we see that basically we had the Spider Portfolio Mortgage-Backed Bond Fund, ETF actually, SPMB, taking about $752 million, and then we saw that the iShares Core U.S. Aggregate Bond Fund ETF, AGG, took in about $506 million. But if we took a look at the bottom, the Spider Bloomberg Barclays High Yield Bond Fund, it's been kind of at the pariah as of late. People have been putting a little risk off when we look at bond funds. It lost about $771 million, and then we saw the iShares iBox Dollar Investment Grade Corporate Debt ETF, LQD, lose about $446 million. And that brings us to our next group, and that'll be Tax Exempt Fixed Income Fund Macro Group. Take a look at that. We find that we saw that muni bond funds for the 59th consecutive week took in money, $1.6 billion this week. It's the 8th consecutive week they've had plus hyper returns, 0.23%. And the big winner here was intermediate municipal debt funds. They took in $465 million, and the general and insured municipal bond debt group took in $436 million. Now, if we take a look at the muni side of the ETF arena, we see that they took in $180 million. 20th consecutive week that they've seen net new money coming out of the group. And that's a little bit of a new trend that we've been taking a look at. Investors are turning more and more to municipal bond ETF groups to get their exposure on the muni bond fund side. That brings us now to the last macro group, and that is money market funds. And money market funds basically saw, for the 2nd consecutive week, net inflows, $6.2 billion this week. And how that broke out is taxable money market funds saw about $5.6 billion come to the group. That's broken out. Institutional basically saw $1.4 billion. And the real big mover as far as bringing money in, $4.2 billion went into retail money market funds. So obviously, investors are continuing to be a little bit more fearful and putting money, parking money on the sideline to see what's going on. This coronavirus has really got people on edge. Tax-exempt money market funds took in about $609 million, and that kind of brings us to the end. We'll obviously be keeping an eye on Q4 earnings season. Right now, we're at the very end of it. I think we have like 470 of the 500 S&P 500 constituents who have reported so far. About 70.5% of those that have reported so far beat their earnings estimates. So it's been, again, a good reason why people have been kind of piling on and jumping into the market again. But we'll keep a keen eye on what's going on with the coronavirus. There's kind of been a new outbreak. They've been talking about it in Japan as well. So that will obviously be a concern that people are going to be curious about and keep an eye on this earnings season to see what goes on as well with that. So they're looking at obviously the devastation caused by that, but certainly the impact it have on global growth. Well, I basically have tried to cover as much as I possibly could in this short video. But if you want to do a deeper dive, you can go to our site at www.lipperusfundflows.com, or you can join us next week when one of our analysts will go over the flows trends of the week. Thanks for joining me. My name is Tom Roseen, wishing you the best in your wealth planning and creation.